Hey traders, we're going to be looking at three different assets and then looking a little bit at the miners that are basically mining these three assets. We're going to be looking at gold, silver, and copper. In my opinion, copper looks pretty bullish. It already broke out of its squeeze that we are currently seeing here. Currently broke the $4 range, which we haven't seen since the 2011 high. Pretty significant, which is a little bit lagging behind from gold, but silver has yet to break its all-time high at $48. So copper, in terms of relative strength, is at a better place than silver, which is a little bit surprising, but still some information coming in from the market. So quick look at these three assets, and then we're going to go on to the relative strength of some of the miners that I've picked and just put them in a basket. And then we're going to be doing some simple relative strength analysis, no real fundamentals. Going to try to get some quick value here for you guys and girls. So first things first, we do see a flag here on gold looking at, let's say, the monthly chart. Pretty major level that we're seeing at around 1786 hold. In my opinion, we could see one last flush to the downside, pushing the price all the way to like the 1600s to maybe 1680, 1690. There is a level of confluence there, maybe with a series of descending lower lows connected by a descending trend line. So that could create the level of confluence to hold the support there, but that would be the last flush for the sellers before the buyers start to consolidate and accumulate and buy back, and that would be the final formation of this flag. So we'll see where it goes. In my opinion, that's going to be the kind of last full move to the downside. Before we consolidate, we'll look at the smaller time frames and talk about that, and then have that next impulsive push up. But since the $1,400 break back in the summer of 2019, we've seen a monumental push. Let's just look at like $1,400 break to the high, which was, let's say, over 2K, over 50%, and the market cap is over $11 trillion, which this is the largest market cap in terms of assets. So that's a monumental move in terms of like the number of dollars that are actually accumulated in the market cap. If you think about trillions, doubling it takes a lot. So we're going to be looking at silver now. Just wanted to understand that. And a quick side note, in terms of my opinion, this does look like the potential lull that we're seeing in silver. Although right now, this is what's seeing on silver. We're seeing a nice squeeze. We're going to see, because if gold does push to the downside to have that final flush, silver is going to follow suit as well because they're pretty well correlated. So we're going to see a nice settling down of silver, but we're going to be looking for a nice hold of some level of a high or low, even if it breaks a minor market structure, like a minor low right here. I don't really mind because the overall macro direction is up, is bullish for silver, gold, and copper because the US dollar is faltering. It's moving to the downside. So that's in short, what we're going to be seeing on silver, in my opinion. We can talk about it when we get to the smaller time frames for that asset. When we're moving on to the 2-day chart, we've seen a couple fake outs. This first fake out on November 4th, second fake out on January 1st. And in my opinion, I think bulls are definitely hesitant to enter back in gold right now. So that is, in my opinion, kind of the reason why we might see that final flush breaking below this support created on November 30th at around 1780s-ish. Final flush to the downside, and then we create our descending zone right here, which would then be a potential descending trend line, descending resistance, descending support, creating our flag formation, and then we're finally going to get our impulsive push. I'm going to be pretty patient before we actually look for a confirmation and a continuation. We're going to look for two things. VSA, we're going to be making sure that we got a lot of relative volume, a lot of buy pressure coming into the markets here, and two, hold and a continuation of the initial impulsive push to the upside. Usually in squeezes, like we can even see, like this is a squeeze right here, you're going to get your impulsive push to the upside, right? Breaking a major zone. Depending on how early you want to make it, you could be seeing that descending or ascending triangle right here be a potential zone. If you're going to be a little bit more hesitant, you could be either looking at this zone or this zone, right? But regardless, you're going to be looking for market structure that has validated in the past. What we're going to be looking for is a little bit higher up, because in the past we've seen the bears slam it right back down. So you need to be patient. It does look like it is bottoming, so if we do get it could take a while, right? Like, we've seen the price of gold bottom, and that took 7 years, 8 years. So if we're looking at this bottom, we see that right now, but we could see that final flush to the downside. So then that could be the scenario that we're seeing. So we're seeing a nice bottom right here. We do see a descending zone. Just because it breaks that descending zone doesn't mean we're going to go straight up. We could see a descending zone, a failure, and a slight formation of what we saw for 7 years, from like 2013 all the way to 2018, 2019. Just in a more condensed version, which would be totally okay, because the next impulsive push is just coming. It's along its way. We're seeing a nice formation. This is a very early formation for a potential bottom, but in my opinion, we could see that final flush here for gold. If we don't, that's totally fine. It's not like I'm short gold. There's nothing that would be a negative for me. If it held this around 1786 zone, it'd actually be beneficial, because something like silver could, or even copper, could then fly, because it would give the confidence looking at the biggest market in the sector of the metals market, looking at gold. If that's holding, if that has confidence, then something more speculative like a miner in copper or silver would maybe have a little bit more buoyancy and a little bit more of an attraction for speculators to long that asset. So that's what we're going to be looking for in some of the markets here. Going to be looking a little bit at silver and then copper, and then going on to the miners, looking at some relative strength and weakness. So the weekly chart, we've talked about this many times. We saw a squeeze. This $13 zone was a major base for the bear market of silver. We saw a squeeze, contracting the price, making a series of lower highs. The initial very, very strong impulsive push absolutely broke. Let's look at the monthly, this major resistance that we saw around $21, $22, and is now holding it oh so perfectly as a new level of support. We see after this triangle formation from 2011 to 2013, start the initiation of the bear market. We saw a massive impulsive push to the downside, and then we saw 1, 2, 3 major rejections, and then the capitulation mode where we came all the way back down to $13, and then we had basically the shorts take out a lot of their positions. Maybe a little bit of people who were late to the game took out some of their shorts because they thought it was a little bit getting too bullish for them. And then we saw the true long-term consolidation and contraction we needed in order to start this new bull market that we're seeing right now, which is in perfect confluence with the US dollar's capitulation to the downside, which we will see coming soon, in my opinion. So looking at a smaller time frame, major zone that we need to get past is $28. That was the previous support here within this triangle. We do have a base at 21, which in my opinion has already come in, so that is the base. So looking at the daily chart, we do see this ascending zone right here, which could break, but we're going to be looking for that to still hold, where that's going to be the base. This is the base that we held right here, so it's not really going to be passing $21. Even if we come in and form something like that, we could see maybe a squeeze right here. We don't exactly know. We could see maybe just like an ascending zone right here. We don't exactly know, but I wouldn't mind this consolidating a little bit further. That's a little bit too ascending for this base. We want it to be very symmetrical. Like, let's just do something fun and incorporate this kind of, well, I wouldn't want it right here. Let's do a bars pattern. I'd say like that's the middle. Oh, I guess I can't do it backwards. Interesting. Yeah, I wouldn't really want to do it like this. Kind of, I guess, something like this. It's not, I didn't really think it would be possible, but yeah, maybe something like this, where you get a nice bottoming formation. Let's get our brush. Right, and that was the bottom there, so that wouldn't be absolutely perfect. Maybe something like this, where you're getting the high, you might get a break, and then this is where the bears might get a little bit antsy and want to short right here, because you get the break of this ascending zone, the validation. It's looking pretty good. You might get a double top here. Might move to the downside, retest this major zone right here of $17. That's what they're thinking, but in my opinion, I don't think that's going to be the case. We're going to see a little bit of a stuff for the sellers. Buyers are going to step right back in, and then once the US dollar starts to fall below this major zone that we're going to be looking at, as well as maybe copper starting to do well and gold holding the level of confluence after its final plunge to the downside, we could be seeing silver kind of do something like this, and then having that nice impulsive push to the upside to the next major level of $35. So that's going to be what we're going to be looking for silver. That was that previous next major zone here. If we're looking at the weekly chart, the all-time high was like $50, just under $50, $49. So we have a long way to go. Copper's almost at its all-time high. Not BTC. Gold is already broken its all-time high, I believe. 1780. I don't exactly know what the all-time high was. I think it was 2K. But yeah, broke 2011, which was his previous major high. So that's very significant. And silver is definitely lagging behind, although recently it has appreciated at a greater rate than gold. So it's catching up. The gold and silver ratio is moving to the downside quite aggressively, which we saw back in 2010 to 2011 right here, which is the ideal situation to be looking at silver miners and silver as an asset as itself, just looking at like Boolean or other methods of just storing it physically. So we're going to be finally looking at copper and then looking at the silver miners here. So quick look at copper. Major squeeze that occurred, very strong push to the upside. If we do get a little bit of a sell-off, I'm a little bit hesitant on how strong copper will be. Maybe we might get a sell-off to respect this major previous zone right here, sitting at around $3.50. Psychological zone, as well as a major level looking at the structure of the chart here. Even if we take it back all the way, we can see a pretty major zone. But overall, that's what we're going to be looking for a potential first zone of support. But overall, on a larger macro standpoint, let's just take a quick picture here of copper. We see this squeeze that occurred, holding a major base, which was sitting around in the 50-cent range. We don't exactly, a little bit over the 50-cent range, 56-cent range. And then we saw a squeeze and then a very strong push to the upside when gold started to really emerge as a asset that does really well from like 2000, or very early 2000s to 2011. It kind of halted during the financial crisis in 2009-10, but from that point, it was appreciating very, very well. Better than most stocks, to be completely honest. So we saw copper do something very similar from early 2000s all the way until kind of maybe not so much 2011, but we saw copper do very well. It went from like $1.12 to, let's say, 380, 350. Very solid. And we're seeing something similar occur right now, where gold started to do very well kind of in the summer of 2019. Copper started to break out of its major zone, except this one's even bigger. This one was a smaller squeeze, we can see, and this one is a larger squeeze. If we look on a 3-month, this is just a wick right here. This is a candle closure. So it's a very well respected zone, and if we look at a smaller time frame, we can see there's hesitancy when it's moving to the downside and to the upside at this ascending trend line. So it is a valid zone. And then if we're looking at this squeeze, pretty large squeeze, opens from here to here. So then if we're looking at this high here, that's going to be the first impulsive push probably. So just like from here all the way to here is the size of the opening of the triangle. So then definitely could form a new high, pull back to the 450 range, and then making that next push to the upside. So overall, copper is looking very favorable. I think it's looking better than gold, to be honest, and even silver as of right now. So there are some copper miners that do look really bullish and have done extremely well in kind of the previous handful of years and months, which we'll take a look at in this video. So that's going to be all the assets, and then we're going to be looking at the miners right now. First, we're going to be taking a look at the relative strength and weakness. This is going to be basically a pile of different gold miners in a single chart, all placed on the same time frame on the same chart. So if we're, let's say, looking back from like 2017, I guess this chart is a huge outlier, but let's say if we zoom in a little bit more, from May of 2018, the winner in these selected gold miners is DPM, Dupree, I believe it's called. It's on this list. Dundee Precious Metals, that's what it is. And then we're going to be looking at ELD, which is another one, and then another one is LUG. But as we can see, zooming in and out, we can see that there are some stocks that are relatively strong, relatively doing well, and some that are doing not so great. So that's going to be the way that we're going to be trying to assess on a technical standpoint, just in terms of relative strength and weakness, where the capital has been flowing so far. Because a lot of these companies are gold miners, and then the silver, and then the copper. So they're in the same sector, and then the capital is going to be flowing into some and not others. And smart money knows where to find, usually more often than not, quality products and quality companies, or at least there's enough buy pressure that it's supporting the price, right? Because it's just how much someone else is willing to pay. The market determines the value of the market share and the price of the share. It's not like it's determined upon by the company. So we got to look at what is being indicated as being a strong asset within certain sectors. So obviously, this one, if we're looking at taking a step back here, KL, Kirkland, Gold Corp, maybe I believe it's called, but Kirkland is a major outlier when we're looking back at like 5 years, 6 years. So we're definitely going to be taking a look at that. When we're looking at a smaller time frame, DPM right here is going to be a major one. Dundee Precious Metals is going to be something that we're going to be looking at. And then zooming in, we can see ELD is also another one that has proven to be a relatively strong stock compared to the list that we can see right here. But overall, recently they haven't really been doing too phenomenal. ELD has been doing all right, but overall, like, this is a zero line. So since November 2020, like, it hasn't been doing phenomenal, and that's why we're going to be looking at copper first and then gold last, because I think gold has the longest still to consolidate before we're going to get our next impulsive push. Copper's already commenced it. Silver's on its way, but it has one last pullback, in my opinion, to go through before we're going to get the actual impulsive move to commence and start. But that's going to be the main assets that we're going to be looking at here. So let's first look at Dundee DPM. Major bottom at around $1. Kind of not surprising there. Major psychological zone. And then we see a nice contraction with a series of lower highs. We see a break in this major zone. So we see a nice level of confluence right here. All throughout the stock at around, let's say, $6, $5, just basically $6, right around there. So we could see a nice pullback to that zone. But that $6.20, $6.50 for DPM could be a really great opportunity. We see lots of buy pressure coming in relatively. It has done phenomenal. Like since the COVID crash here, March 20, it's done well above the average for a lot of these gold miner shares from the huge sell-off that we saw. So overall, it's looking phenomenal. Look at that buy pressure coming back and pushing it right back, and then we see the pressure come in and the momentum to break this major zone, not just a descending zone, but also a major zone. Like looking from the monthly chart, look how perfectly this turns into support. Resistance on the way down right here turns into support, resistance, resistance, resistance. Probably going to be a support there. Wouldn't be too surprised, especially if gold starts to sell off. And then we could be seeing a nice squeeze occur, something like this. So if that turns into a nice support, and then we're going to be looking for, on a weekly chart, something like this. Ideally, right? Something kind of similar what we saw right here. This is a very similar type of structure, where we're ideally going to be seeing maybe a sell-off right here, but overall we're seeing a strong impulsive push and a slight sell-off. We're going to see a contraction and a consolidation of the volatility, and after major contractions, we're going to get expansions, and that's, in my opinion, where gold's next impulsive push, as well as these precious metals miners, are going to get their appreciation. So a little bit of patience that has to take place here for some of these miners, but overall, in my opinion, they're going to be really good opportunities for longer term, because the US dollar is definitely not going to be going up, in my opinion, anytime soon. And unless there's going to be CPI numbers that are going to be double digits, which it's at like less than 0.5% right now, they're not going to be raising interest rates. They're not going to be contracting the monetary base. There's no way. This next one is KL, the one that we saw with the relative strength that has been absolutely booming since like 2016, 2017. And it absolutely has. It was under $1 and now it's at $45. So got to be careful. Definitely do your due diligence in terms of the fundamentals. But obviously there's a tremendous amount of capital getting injected within the markets into KL. Lots of buy pressure coming in. Huge massive injections of buy pressure, as we can see. A little bit less right now, but overall we're looking for our first major contraction, our first major structure, and we could be seeing it right here where we're seeing our first low, which was a higher low than this low. It looks like we could be getting another sell-off here coming in to form our third higher low, and then if we're going to get some contraction, that in my opinion would be a really good opportunity. Even if we're getting a nice let's get our brush, nice contraction right here, would not be too surprising to try to make it back up here to at least form a consolidation zone. And then even from like $32 to $79, you're basically getting more than double, like 100 and let's say 10%. Pretty awesome opportunity for just a simple move. And then it starts to consolidate and push up. You're basically playing with house money at that point, and that is a really good opportunity to be in. So a lot more patience that we do have to have in these opportunities, in my opinion, but definitely doesn't hurt to be aware that we could see a next push here. So, and these are like huge market caps that we're talking about that are going to be taking place. So last one that we're going to be looking at is ELD. Like we can see, March of 2020, this one has done pretty well, but KL has done a lot better in terms of relative strength. This one has a lot more information, so we have seen it go all the way up over $100. It's currently at $15 right now. When gold was at its all-time high of 2011, this stock ELD was over $100. Now it's at 15, so it could really theoretically, once gold starts moving again, if it does hit its all-time high, almost really 10x if it starts to kind of break out of that zone. But it has a lot to go, for sure. We do see a potential nice squeeze up, potentially. Like we do see a nice forming of a higher lows right here. Has a nice little sell-off that could potentially come in, which would actually be a good benefit. But this is the nice squeeze that we currently see. So then we're going to get our nice middle ground. We're going to get our little dotted line. And then we see a level of confluence. Hold that zone right here. So we have a couple of options. The first one, like we saw kind of here, is a double bottom. I don't think that's going to be the case, just because that would be the opposite direction of where gold's going, unless my entire market thesis is wrong and the US dollar starts to do well, and there's massive deflation, markets are falling, real estate stocks are falling, crypto doesn't do so well, gold and silver don't do well, US dollar is doing well, then you'd start to see this potentially form a double bottom. That would be a good short opportunity, because you're looking at like really, really significant gains to the downside there, but I don't think that's going to occur. We could see a nice little sell-off here to form even the higher low, but overall we are looking to see this kind of squeeze up against this $15 range. If we get a nice little sell-off, that would be a great formation for a potential setup similar to this. So what we would be seeing is, let's get a little draw in here. So we see that being option one as a double bottom. I don't think that's the case. I think we're going to continue to squeeze up against this zone. So we're squeezing, failing, squeezing, failing, squeezing, failing, and then we're going to be forming this very tight squeeze. And then once we start to break out of this $15, $16 range, we're going to be aggressively pushing up because of the contraction that we saw. Kind of similar to here, but the opposite way, right? We're seeing push, no, attempt, no, and then finally you're getting such a tight contraction right here after so many attempts at breaking this zone, boom, 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 and then you get this strong push, boom, and that's where you can make quite a bit of money here. Yes, we are looking to position trade, and yes, it did come back up. You got to hold, you got to hold, but at the end of the day, these are the types of moves that we're going to be looking for. And this is also the weekly chart, right? So for move to $17 to the next major level of around 25, let's say 27.30, getting 100% of your money is not something to scoff at. Although from a longer term standpoint, we do expect this to continue overall because we're going to be looking at maybe something similar to here at like $50. And then the second TP would be like maybe here, way further down the line. But overall, when we are looking at this from a smaller time frame, we like to see a squeeze occur here, even if we plunge into a slightly lower low. I don't mind because we're still forming a series of higher lows, and then we're going to be forming some level of a squeeze. And like I said, forming a nice squeeze here would be a great opportunity for the next push to the upside. So that's going to be the opportunity for ELD. I think gold is going to be taking a slight move to the downside. So we're going to be maybe seeing the price fail to hold this zone right here. If we zoom right in, right here, so then that could be the catalyst and the support right here for the ascending trend line. And then once we're in this range, that's the potential breakout range, and then that's your first entry. And then if we actually start to squeeze up, we're going to be looking for levels of confluence right here with this ascending zone to be looking for potential opportunities to retest at that level. So those are the two different entry points that we're going to be looking at with this current structure. If it holds, if it remains to be respecting this ascending wedge, which in my opinion is going to be melting to the upside. There's going to be a little bit of volatility that will take place before, just in terms of my opinion, but overall, that's going to be an opportunity that will provide some really lucrative opportunities or lucrative ROI in terms of the risk that we're taking and the potential gains that is to be had. So I like to really stick at large time frames because patience is easier when there's less candles, and the candles mean more. The wicks, where they land in terms of candle closures, it's very significant when you're looking at weekly, monthly charts. So that's going to be gold. We're going to be looking at the silver charts now. Quick look at relative strength and weakness. HL is going to be one of them. This is going to be a major one, EKX, and then zooming in, SMT as well. And then the rest of them don't really have too much significance. First Majestic is also definitely a major one that we should look at. And AXU. So let's see what we have right here. We have SMT, we have EKX, and we have HL. So we should talk definitely about AG, which is First Majestic. But first, let's look at EKX and then go through around here. So 2011 was not that much higher. So relatively speaking, we don't have a whole lot more to go before our breakout for this silver miner, EKX, Endeavor Silver Corp. We had a very, very nice bottoming structure right here. We even had higher lows, maybe not so much perfectly at $1. So I guess we're holding that dollar perfectly zone. But in terms of candle closures, we are forming nice higher lows there with a wick closure turns into a candle closure pretty well perfectly. And we can go a little bit more aggressive like that if we really wanted to get that wick and then candle like so. And then we had a nice squeeze that did come to a complete stop right there. We could maybe go a little bit less aggressive. I think that would be a better option with a little bit of an overshoot, like an overshoot after the major push. Like if BTC usually overshoots targets because of its bullishness. Sometimes in less aggressive markets it will, just with the geometry of the structures. But we do see a nice squeeze that occurred right here, not counting the overshoot. So first, second, third, and we see it validated all along here. And then we see a nice level of confluence within this major zone right here, which was a previous level of resistance, which now turns into a new level of support. So overall, in my opinion, we're now within this structure right here. So we're going to be trading within the, let's say, above $5 range for the most part, all the way to the $10 range. So ideally, we're going to be looking for opportunities as close to $5 as we can, although it is kind of moving up right now here. But at that point, let's get our arrow and then figure out exactly where our major level of confluence is going to be with the structure that we're trading off of. Yeah, not far off of the high. Right? We got to go to where we broke out right here. Maybe a little bit lower. Not much higher than the all-time high, really. So we could see a pretty swift move from where we currently are to around the $10 range. Like I said, silver does look a little bit better, but like always, we have to keep a little bit of hesitancy because gold could sell off. But it would be nice to see a little bit of a move to the downside to validate maybe around the like sub $5 just one last time, because there's a pretty major level right here. If we are looking at the market structure, we see a huge push to the upside, massive buy pressure, and then we get a slight lull, buyers still coming in. This is the nice bottoming structure that we saw even on a large time frame on gold and on a slightly smaller time frame on silver. But overall, we see our first impulsive push, a higher high. We could see a higher low here, so we're seeing a market structure where we're seeing a shift from a consolidation into a series of higher highs and higher lows. We could see a nice ascension type of structure where it could be a wedge, it could be a channel, but then we're going to see ideally a potential slightly higher low at like $5. I'd actually be looking to enter there. I think that'd be a pretty good ROI and a pretty good risk reward in terms of a opportunity here. Let's just look at 506 and look at the previous low here at 331, and then the $12 range is around that next major zone there. So looking at the risk reward 4.45, that's pretty solid. That's going to be an opportunity that in my opinion is worth it. So I'm actually going to be keeping that as a tab and keeping an eye out on if it does start to pull back a little bit due to the silver market pulling back. Oh yeah, I guess yeah, EXK, I don't have AG on here. So SMT is going to be the next one. It already has broken out of its 2000 and I guess it has not. I guess this is 2017. Yeah, much smaller chart. Wow. I guess let's look at a monthly chart. We're testing this previous major level of resistance right here, seeing if it will hold. If it doesn't hold, not great to see, but it's a little bit bigger. We can incorporate that wick there. We do see a nice potential, or it was a completion of this reverse head and shoulders right here. We can see shoulder, head, shoulder, impulsive push to the upside, validating this previous resistance as a new level of support. Overall, it's looking pretty good. There's quite a bit of like momentum that's coming in from the lows of 2020 here. Let's bring in the volume. Lots of volume coming in, tons. Let's look at a weekly chart to see if it is continuing. Not as much. You saw an initial massive injection of buy pressure, and then after that, you do see it continue. This is probably the actual investors that are seeing just the momentum, the overall market move from here. These are probably buyers that are understanding like the, I guess, not insider trading, but understanding the fundamentals and the shift very early on. And this is where the TA and the momentum and the people who find out later come in. But massive head and shoulders or reverse head and shoulders play through. And we see a brand new high. Not really seeing much of, like if we saw a higher high right here, we could see something like this, where we see a series of higher highs, but this is obviously not even close. So nothing to worry about there. So mainly what we're now dealing with is to see if this ascending, if this horizontal level of support is going to hold. Right now, all we're looking to see is if this zone holds. If it doesn't, we're going to be trading within this range, which is not great to see. We've already seen a little bit of hesitation from the buyers with this zone right here fail. It was actually probably initially like this, and then you see the hesitation from the sellers or from the buyers. You see it slam down each time, and then you get the sell-off right there. Would not want to make this trend line right there, definitely not at all. What we're looking for is to see a lot more of a hold of this $3 range before we look for anything really as a structure. If we do see it hold right around there, we could see something like this, and then maybe something like this if we see like a a high, and then it came back down, and it came back down. Maybe something like this. Like this is the initial push. This is the first kind of wave where you see the first top come in, and then you see the second initial push. You see a slightly higher high, maybe a double top, maybe a weaker lower high, and then you see a second nice little wave come in, and then you see the final capitulation move to the downside from here, where everyone thinks that this is going to be the ascending zone, and you see the final capitulation, and then you get the descending zone right here, and then this is the third kind of wave right here, and then you get the slight ascending zone, and then you get the nice formation that's going to give you the great opportunity to look for a long. So there's a lot of like I'm saying, there's a lot of waiting to be had within the overall precious metals market, just because gold, I think, is going to be moving to the downside. One of the stocks that we're going to be looking at is, in my opinion, really good opportunity for a long as of right now. Just the same with this one. I think a little bit of a slight move to the downside, closer to the $5 range would be good, but that's going to be the opportunity that I'm going to be looking at most for silver. And then the last one that we're going to be looking at, I'm just going to switch this to a monthly. Take out this, we don't need that, take out that, and then just going to be seeing if it's going to be holding. And then HL, let's look at the monthly, very long term, been around for a while, since 68, so definitely a long time. But look at that contraction, unbelievable. I think this is going to be a huge play out once it inevitably does break out. We're seeing, we could even be more conservative, but this is that major high. So this, in my opinion, is going to be a huge breakout when it does eventually break to the upside here. Not yet, because we haven't seen it play through. We haven't seen even within the structure right here breakout. And this is the current structure that we're seeing right now. Let's just play within this zone right here. But we're seeing a lot of confluence, right? Let's take a picture. Because we see the series of lower highs, very well respected. So we see a confluence of the descending zone and this structure right here, right? With the resistance turned to support all along there at around like $1.50, let's say, $1.60, and in the $6 range. Obviously, this is a very volatile asset, but during these times, it's probably not a bad thing to look for volatile assets, to be completely honest. But we see these nice fluid, oops, that was not very well drawn, these nice fluid waves that are contracting the price. And then we see these higher lows, hold, low, we see a higher low right here, and then we see a nice base form right here, and a very, very structured consolidation right here. And then if we're able to get this ascending zone to hold all along here, then we might get an ascending zone right here, which is a really, really great situation to be in, especially when we see silver ramp up to potentially have that next leg up. So worst comes to worst, we see this nice ascending zone here. I think we are going to be just consolidating at least like within the $4 range and above at this point, like here. And then we're going to be squeezing, break, and then doing something like this. So that is the ideal outcome that we want to see here for HL. So when we're looking at a weekly chart, we see a base form right here, kind of all the way back at around $4.50. And then if we are going to be looking at a potential sell-off that's going to be holding 450 and beyond, that would be a little bit scary. Like there's nothing really to hold beyond that zone, so we want to see it hold at that level. But let's just see if there's something that we can see from previous bullish pushes. Not really. I guess something like that. Yeah, I could see that. Let's get bars pattern. Kind of like this. Right, we see our first consolidation. We see a slight move up. We see some hesitation. And I think that is a pretty decent outcome that we could see here within the market. Where we see hesitation, we see a little move to the upside, a little move to the downside. This is where you do not want to get shaken out. You need to give it a little bit of room, be comfortable, don't over leverage or over margin or overexpose yourself to too much risk. It makes sense in this market because the follow throughs are phenomenal. It makes sense to be a little bit more open and give your stop loss a little bit more room. You don't need to maximize the amount of money you need to put in. You need to maximize the opportunities that you're actually capturing and not getting stopped out. And in order to do this, you need to reduce the position size, lower the stop loss. You got to do something to make sure that the volatility isn't knocking you out and you're able to hold on to these huge pushes to the upside that we're seeing in not just like the commodities markets, but like really, I'm just looking at crypto really like right now, and it's unbelievable. Anyways, looking at back at this. That's going to be the overall outcome that we're going to be ideally looking to see is a push to the upside, a pullback validating this around $7-8 range to be a nice level of support. We're going to be looking for that hold in market structure, and then we're ideally going to be seeing a nice contraction, kind of similar to what we saw here. But as of right now, we haven't seen the break above the market structure for this sideways consolidation, so it doesn't make sense for us to look for opportunities just yet. It makes sense to have more confirmation because silver could have that nice little spill, and we don't exactly know what HL could do, so we want to ensure that we are getting the highest level of confirmation while still being able to capture the meat of the move. So, last thing we're going to be looking at is going to be EX, not this one, copper, which is just HG. This is the futures market here. The one that we're going to be looking at, I guess the most, is going to be Pan Global and Bitterroot Resources, which has just completed a huge wedge. The first one's going to be Bitterroot. Not really going to be looking at, actually we can take a quick peek here. We can see NRNs somewhere up there, but the huge outlier is going to be Pan Global, which is this guy right here. Copper is, in my opinion, commencing a huge bullish move, so Bitterroot is just kind of starting its bullish move as well. Super illiquid, obviously. You got to be like very, very careful with this sort of stuff because if you have illiquid assets, you're not going to be able to get out of them quickly, or you're going to have massive slippage. So you have to be careful. You have to ensure that the amount of money you're putting in is something that you can afford to lose. It's like an altcoin in the crypto market. Some are more established, like AG is very established. You're going to have lots of liquidity. This asset, you're not going to have much, but you know, it's gone up to $8 and it's at 20 cents. So the ROI is pretty unbelievable, and it just broke out of its major zone, currently sitting above its previous key level of resistance, which is still currently is a supply zone at around 30 cents. So I'm currently going to see how it reacts to this 30-cent zone. I think if it has a slight pullback with the overall metals market taking a little bit of a plunge with gold and silver kind of leading that charge to the downside, it would be a positive thing, because then once it breaks above that 30-cent range, we already know it's validated as a major zone. So we could put like a stop entry above the zone. We could just keep an eye on it. But overall, I think it would be really great to see a hold of the 30-cent range right now, a slight pullback, and once it breaks through it above 30 cents, we're going to be looking for that next impulsive push to carry the momentum. And we're already kind of seeing it right here, right? But ideally, we want to see a slight hesitation, maybe a slight pullback. I'm not really looking at this like anything underneath a weekly. Like, it just looks too disgusting. Like, looking at it from a daily just looks a little bit gross. Very, very little liquidity. But could be an interesting one for some massive opportunity. But like I said, huge risk in terms of illiquidity. Next thing, kind of similar thing, Pan Global, PGZ. Is the next one. We see very, very great market structure here. If we're looking at the impulsive push, we see a nice hold of like the 6-cent range, and then now we're at a point where we're contracting above a major level of resistance, which is 28, which is holding as a new level of support. And then on a weekly chart, we are forming a very nice symmetrical triangle. And copper is doing very well. If we're looking at a weekly, like I said, I don't like to look at smaller time frames, but it is holding pretty well. And I can just draw it here and for you if you don't really see it. Very, very well respected symmetrical triangle formation. So that's going to be the most actionable current trade that we have here, is PGC. But overall, that is the two ones that we're going to be looking at most. Copper is going to be the most speculative. It's the least liquid. The gold ones that we looked at is going to be the most liquid, but you could say the least speculative. Like Kirkland's definitely, or Kirkland is, yeah, Kirkland is a gold one. Is the probably most speculative out of the gold ones, but like things like AG are definitely not as much so. So actually, let's take a look at AG. Let's look at AG, First Majestic Silver. And then this one is going to be the one that we complete the video with here. Overall, look how beautiful this looks. Very, very beautiful structure. And then we see it break right here. Oh my goodness. Oh man. That would be the better zone right here. And if we're looking at it from 3 month, yep, perfect. Wow. And look how big the major zone that we're looking to target is. So then if we're looking for possible opportunities, let's say $15 range. Let's say $50 on the nose. 6.3, 36% to 230. That is another opportunity, and massive RVol coming in, high relative volume. So we looked at a few opportunities here today. Oh, I guess that's on there as well. Let's keep it on there. It's okay. So regardless, First Majestic, Endeavor, Silver Corp, really good opportunities. In my opinion, I think Endeavor at like $5 would be a really good opportunity. $15-ish for First Majestic would be pretty solid. I'd take that any day. These are more speculative. Bitterroot and Pan Global more speculative, but copper definitely is looking like it's breaking out in my view. And then gold still has a lot to go. ELD looks like a decent opportunity if it's able to hold the $12 or like $13 range. Kirkland is very volatile, so if we do form a structure later on, it could be great, but gold miners don't really look very promising right now. I would say silver miners look really promising as of right now. First Majestic, I'd say, is, if I had to pick, the #1 pick that I would select as an investment, as well as the trade that is the most actionable as of right now. So hopefully that was able to provide you some value for today. If you enjoyed it, if you thought it was informational, educational, entertaining, give it a thumbs up. Really do appreciate it, so then we can know to continue making more videos like this. This was definitely a little bit different. Usually we just do crypto market and global macro updates, but we do try to provide like a more deeper dive sometimes like this. I do it all the time, but obviously if I'm making a video, I'm having to explain every single step of the process and kind of go through it. So hopefully this was able to provide you with some level of knowledge with how we try to vet different opportunities. So obviously we'll go through the fundamentals and look at that as well. But this is just the technical side of looking at opportunities, trying to understand ROIs, understand previous price action, understand the relative strength, because it is important, in my opinion, to know where the capital is flowing in certain sectors. Right? It just makes sense. Yes, things can obviously change, and some people like being able to get the I guess you could say the lagger of the group. So hopefully they'll be able to buy at a lower level, so then they'll be able to have more appreciation. But capital flows into projects for certain reasons. Like if you're looking at relative strength in terms of crypto, you see all these alts boom that had relative strength earlier on. Link, BNB, Polkadot had major relative strength, and now they're within that top 10, top 7 list. And I think that's what we're going to be seeing here with these different miners, copper, silver, that we're going to be looking for relative strength early on, as we can see right here, like First Majestic, END, HL looks really good, KL looks really good, Copper's BTT, and PGZ all look really good in terms of relative strength. So these are the ones that we're going to be looking for. for pretty lucrative opportunities. But like always, you have to be careful, especially with these less liquid assets and instruments. So stay safe out there. Hopefully you're making really good money. And until next time, have a good one, traders.